Hello, hello, hello. Good morning, everyone. If this is your first time jumping on, first of all, I want to say thank you for taking your time and clicking on this video. I pray today is actually informative for you. My name is Kobe Cornell Boone. I am the managing director and founder of Boone Capital. We are a private equity firm based in real assets. So think land, timber, farms, ranches, agriculture, and all the wonderful things that come along with the outdoors. Today's video and really this week is going to be pretty amazing. So I'm going to be focusing on different topics, as you've seen today, that are kind of angled towards what's happening in a space that I think is oftentimes kind of siloed. I think when you discuss development in some worlds, they kind of sit at their table. And when you talk about agriculture or recreation, or even if you talk about farmland in general, most specifically, the conservation side of things and ecosystem kind of sits on another side of the table. And what I want to do with this week's series is really bridge that gap and show you how folks are really finding alpha, if you will, finding amazing upside while also doing good as well for the planet. But finding upside and addressing some very serious problems that we have, um, and growth. And growth. There are more people in the world now than ever before. Food is a big topic of discussion. Water is a big topic of discussion, and how regenerative agriculture seeks to answer some of those challenges. So let's jump into it. Something interesting is happening in the agriculture space right now. And most people haven't quite noticed it yet, as I mentioned. So for the last 20 years, institutional capital has largely chased, apartment buildings, industrial warehouses, data centers. I know everybody thinks data centers are new, but they aren't. We've always had data centers. It's just now we have AI specific data centers, office buildings, self storage facilities. I know some folks in that space that are doing well, and private credit, which is having its own challenges right now, right? But if you zoom out and you look at where certain family offices, your sovereign wealth funds, your long duration investors, so your folks who are, maybe holding an asset closer to a decade, if not longer, right? Where those folks are allocating capital, you'll notice a different conversation starts to begin to emerge. And the conversation isn't really about farming itself, most specifically, it's more so about control. So, control of productive land, control of water, control of food systems, control of natural resources, if you will, and ultimately the control of assets that become more valuable as the world becomes more crowded. As I mentioned before, more people, more crowded, more demands on food, more demands on infrastructure, all the above. So, if you look at it like and kind of say, hey, so what's the difference? Now we're really moving into a space where how do we think sustainably about the road that we have ahead, and an approach in doing so, wherein we can also allocate capital that traditionally might be focused on returns towards other returns that aren't just monetary, if you will, and could fall into the world of savings, which I'll explain a little bit more. So I think many investors, and I would say certainly for the folks that I've been speaking to, um, sometimes they make the mistake of viewing farmland just as a commodity, if you will. So the same way they might view corn or, going to the grocery store, if you will. Same thing with soybeans or cotton historically, right? But that's not what I'm finding sophisticated buyers are evaluating. So these folks are evaluating the systems, the tractors, the fencing, bonus depreciation 179, 168K. They're looking at the infrastructure, that is actually a cost segregation study. They're looking at the infrastructure that supports, the crop itself. And they're evaluating whether a piece of land can remain productive 20 plus years from now. Because the reality is, a business may not, right? Like a business, you could have a great exit, in just a few years, or may not be able to exit at a premium depending on changes in the market. So many things can kind of factor. Whereas when you look at a longer horizon, if you will, that's where farmland agriculture really starts to pull ahead. So whether that particular crop that you're interested in can withstand drought, whether it has reliable water, underground aquifers, whatever the case may be, whether it can support multiple revenue streams. That's when we start getting into recreation. We'll do a later video this week talking about mitigation banking, wherein protections of properties can actually pay you as well. And then ultimately, I think I find this a lot with the family offices is whether future generations will value it more than a current generation and be something that can stay within that portfolio, if you will. So what am I kind of seeing? This is the transition. This is where regenerative agriculture becomes very interesting. It's not because it's trendy. It's not because it sounds environmentally friendly, as I said earlier, save the planet, if you will. There is some components and aspects of that. Very true, but it's because it forces us to ask a very different question. Instead of asking, how much can I produce this year? The question starts to shift to, how productive can this land remain over the next 50 years? Let me take that back. As opposed to how much can I produce this year, the question then starts to become, how productive can this land remain over the next 50 years? And that's where the conversations, I think, go from being a 30-minute call to some of the ones I've had most recently with some family offices to an hour and a half, because there's a legacy component there, there's wealth preservation that is a component there. And I think that is where, again, you start to see farming, row crop, agriculture, this regenerative approach start to pull ahead when we would look longer at a growth horizon, if you will. So what I want to talk about next is a little bit like water. But before I do, I want to tie up that last part and say the ability to preserve productive capacity over multiple decades may become one of the most valuable economic characteristics a farm can actually possess. That's a big difference. But let's talk about water a little bit. Whenever I talk with landowners, developers, different conservation groups, land trusts, or just investors or potential LPs, I keep coming back to the same conclusion. And a different video that you guys can check out, I actually spoke about the $20 billion fund that was approved by Governor Greg Abbott in Texas for water infrastructure over the next couple of years. I'm not sure if they've actually designed a way that they're going to allocate that just yet, but it is a massive need. I'm actively talking to farmers that are in the Texas Triangle, that area between Dallas, San Antonio, Austin, and Houston, and folks actually in East Texas, Sulphur Springs out that way. I've got some good buddies out there who are talking about this need, man. This drought this year has been pretty tough. But to get back into it, water is slowly becoming the hidden variable in almost every land investment. It's not, and I know, guys, location, 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 which has a lot of truth. However, aside from location, aside from cap rates, aside from commodity prices, water, because eventually every investment thesis runs into this physical reality. Can this land support people? Can this land support agriculture? Can it support industry? Can it support growth? Increasingly, the answer depends on water. And what I'm finding is that the reason regenerative practices matter isn't because they make us just feel good. I want to stress that. It's not just a feel good thing. It's because the land that retains rather water behaves very differently during stress. And assets that behave differently during stress often command premiums, right? They oftentimes go for a little bit higher, and that's what I'm kind of finding as a special interest when I'm talking to folks who have a longer hold period, and in full transparency, sometimes larger check size. That interest in the growth horizons and commanding premiums for something that they can hold as a legacy asset. So I do want to talk about carbon, and this is something that a lot of people have a lot of different opinions about. But I want to talk about optionality. I don't believe anyone should buy a farm because they're hoping to get rich per se selling carbon credits. That's my personal opinion. That's Kobe. What I do believe, however, is investors should pay attention anytime a new revenue stream begins attaching itself to an existing real see, touch, feel hard asset. And that's because that's how optionality begins to emerge. And optionality is one of the most powerful forces, I think, in investing and specifically investing in real assets. So I compare it in my mind to, mineral rights, big thing, especially in Texas, where oftentimes the property may have already been stripped of its mineral rights. Conservation easements is another big one that have their pros and minuses depending on the habitat goals or the management plan that that owner has by removing those development rights on either a portion of the property or the property in its entirety. Mitigation credits, again, compensatory banking, mitigation banking, biodiversity. Your animals as well as your foliage that you have on your property, being able to be paid and actually sell those credits is something I'm going to talk about in a video later this week. And then, of course, water rights. Are you able to bottle that water up and sell it? Surface rights. What do you actually have that's readily available to you as an asset from the minerals that are on your property? So when you start to look at that, the land itself starts to present more than just opportunities for a great yield, but there's some other avenues that you can explore for your carry costs for that property as well. So this is where I think we kind of sit and where we separate ourselves from the pack, if you will. We're increasingly interested in a very simple question, and that is how many ways can a piece of land win? How many ways can my piece of land that I'm identifying that our LPs are interested in? What are we going to do with this property? What's our exit strategy? Like, how do we win on the buy? Not the exit, but just on the buy initially. Can we produce crops? Can it support recreation? Is there demand for it? Can we improve the habitat? Is there avenues of conservation value that make sense? Do we have water? If so, are we able to protect and retain those water rights and those resources for the property? Are we in a growth corridor? Is it going to appreciate with this particular area substantially where we are? Can it attract? Is this piece of land, is this tract attractive to larger institutional buyers? Some of these institutional buyers I meet with are interested in state park size properties that I'm speaking to. Some folks are interested in just 1,000 acres plus. But the reason why these questions kind of come up again is because the most interesting land opportunities aren't single purpose assets. They're assets that are multi layered, they have layers. And I believe regenerative agriculture is one of the clearest examples of that trend kind of playing out in real time. So, again, what I'm thinking and kind of want to really drive home and share in this video is here's a capital markets trend that is emerging beneath the surface, and why I believe sophisticated investors are beginning to care more, I think, than ever about regenerative farming and where it kind of falls in their stack of assets that they're holding on to. Um, and in some cases, exploring assets that they can be able to control in perpetuity. And that's another conversation for a different video. But if you like this type of stuff, I hope you will like, share, subscribe, send this to someone that you know. This is going to be a great series where we'll dive in more into these different topics. If you have some questions, leave it in the comment section below. But until next time, I appreciate your time and God bless.